Healthcare stocks are on pace to outperform the overall market in 2022 as investors look for more defensive plays in an uncertain environment. And one of the compelling stories coming out of that group this year is Cross Country Healthcare, a company that provides staffing to hospitals and doctors' offices, including traveling nurses and temporary physicians. And joining me to discuss the company's growth and where the industry is headed next is John Martins. He's the president and CEO of Cross Country Healthcare. Now, John, it's great to have you here, and you've been in this industry many years, but you just dropped your first quarter at the helm of Cross Country Healthcare, which has delivered triple-digit EPS growth for 5 out of the last 6 quarters, earning it a spot on the IBD 50 list of leading growth stocks. And the stock has made an impressive move since mid-2020, but what's next for the healthcare staffing market as we move away from COVID pandemic to endemic?
That's a great question. Thanks, Alexis. And it really is an exciting time in the healthcare staffing industry. We, for the last 2 years, have battled the pandemic, and our healthcare workers and professionals were on the front of the line, really going into the burning building and really serving the communities and the nation to help get us through the pandemic. And now as we're moving to this endemic, the need for healthcare services and healthcare staffing has never been more important. What we've seen during the past 2 years is a burnout and fatigue of so many clinicians, and so many clinicians are leaving the bedside. Recently, we just conducted a joint survey with the Florida Atlantic University Lynn College of Nursing, and only 5% of respondents of nurses said that they would actually stay in the industry or in their current job in the future. And that's down from 24% just from 1 year ago. So there's a definite challenge of finding enough supply to meet that supply and demand imbalance. Now, when we look at the BLS JOLTS data, and if we go back to 2014 with the enactment of the Affordable Care Act, what we saw from 2014 to 2018 was a 50% increase in the number of job openings. And then from 2018 through the pandemic to today, we increased by another 80%. So what we're looking at is an unprecedented time of the demand-supply imbalance. There just are not enough clinicians to meet the need and the demand. Many surveys, and you can read so many different reports and surveys of what people think the shortage will be, but the most accurate depiction so far in models show somewhere about 1 million nurse shortage in the next 10 years. Now, to put that into perspective, there's only 3 million nurses in the entire country, and only 1.7 million nurses work in acute care hospital settings. So there is a lot of demand and need for these healthcare professionals. Now, particularly in particular, the travel nursing industry. In 2018, according to the staffing industry analysts, travel nursing market was about $5.6 billion. And that equated to about 40,000 nurses. In 2023, staffing industry analysts predicts the size of the market will move up to $15.6 billion, making the market somewhere between 80 to 100,000 nurses. So the market has doubled in the last 4 to 5 years, and we need even more nurses to make an equitable solution in the country.
Yeah, and as you mentioned, an incredible growth opportunity here. But I want to take a little bit of a step back for just a moment, because we've seen the stock retreat a little bit from highs in recent weeks as investors sort of digested Cross Country's forward-looking revenue guidance. And there's been some comments from some major hospital players on reducing their contract labor costs. But it seems that the anticipated slowdown in growth maybe is a tough comparison because growth has been so strong. But can you give us a little bit more detail about the various factors at play here?
Sure. So some of the publicly traded hospitals had their earnings call 2-3 weeks ago, and they released a little bit better, less usage of contingency labor. But when we look at the data and really dig deep into that data, what we see is their usage went down fractionally to what they needed. And we believe it actually has to go down further because it's not good for the industry to have too much contract labor in the market. But typically a hospital would use 2 to 3% of their, or 2 to 4% of their total labor would be contingency labor. During the pandemic, those numbers went up 2, 3, 4 times as much. What those publicly traded hospitals all said, though, well, we're going down a little bit, we're still going to be up 2 to 3 times the pre-pandemic levels of contingency labor. So there's still an incredible demand and need for our services. Now, looking at our stock and our stock being a little more volatile the last month, what we contribute that to is right now our stock we believe is very undervalued, and part of that is cross country healthcare had a turnaround during the pandemic. So having a turnaround during the pandemic, investors are looking and saying, which cross country are we? Is this a pandemic tailwind that we had, or do we fundamentally change this company? Now, what we have said before, in 2018, our EBITDA was a little bit north of $30 million. We have now said since the beginning of the year, as we modeled and have seen our model come closer as we're getting closer to the end of 2022, we've said we will exit 2022, moving into 23 as a north of $500 million in revenue with a high single, low double-digit EBITDA. Now, extrapolate that out over a year, we're talking about a north of $2 billion company and EBITDA somewhere between 180 to $240 million. Clearly a different company than we were pre-pandemic. So as we move to the endemic, and every month as we move away from the pandemic into the endemic, investors are now starting to realize and see that our turnaround has been complete, and now we're moving on, and we are a very profitable company. So we expect those multiples to rise as we continue to progress and show our performance through the upcoming quarters.
And talking about that move forward, we have seen the travel nurse segment really have outstanding revenue growth in the last quarter, but can you shed some light on how the other business segments are performing and maybe some of the opportunities there to grow the physician and education sides of the business?
Well, during the pandemic, our physician business, or what we call our locums business, actually contracted. And that's because we had all the deferred surgeries, procedures that happened during COVID. So now as those surgeries are coming back online, as people are now getting back to healthcare on a regular basis, we're seeing that business pick up. What's also very interesting is we're seeing a lot of cardiac care cases. And if we think about it, people during the pandemic maybe didn't exercise over those 2 years, maybe they ate a little bit more than they should have.
It was a tough time.
And so maybe they didn't have that regular regimen that they had. Now they're going back to the doctors, and we're seeing a lot of cardiac cases. So we think we're also going to see a lot more chronic illnesses come up because of the lack of people going to the doctors and seeking healthcare over the past 2 years. So we anticipate our locums business to grow with that. And in Q2, we were up 41% year over year, and we'll continue to see strong growth moving to the future. Now, our education business, and this is where we put speech language pathologists and teachers into schools. The education industry faced a very similar parallel path as healthcare. During the pandemic, these teachers and these educational professionals, they had the same lack of PPE. They had to do online distance learning, which is very stressful. And we're seeing a wave of retirements and quits in that industry as well. So we think the education business is also business for the next 3 to 5 years, where we're not going to be able to have enough teachers, speech language pathologists, and other education professionals entering into this space. And these educations and these schools and universities and charter schools will be needing companies like ours to help with the contingency labor, to help get them as close to fully staffed as possible as they bring in new teachers and healthcare professionals to the education space.
And John, as the healthcare industry adopts more of this gig economy type model, how do you think that's going to open up even more growth opportunities for cross-country healthcare?
What's amazing, over the last 2 years since the start of the pandemic, we saw a change in the demographic of our travel nurses. And now our travel nurses, 65% of them are millennials or younger, as we define that as age 41 or younger. And what we're seeing is that this demographic group, they want to be able to join that gig economy, work where they want and when they want. And what's really accelerating this move of more people being able to go join the gig economy within travel nursing is a lot of times their spouse, partner, or friends now also have work from home jobs, because a lot of companies have gone away and they're doing a not brick and mortar work, but a work from where you're most productive work. And so we anticipate to see more clinicians really go and embrace that gig economy, which I think will help expand the industry, because what will happen is we'll be able to help people not only meet their dream of going and traveling around the country, but also what travel nursing allows for clinicians to do is to help upskill them as they move to different units within hospitals around the country. So we'll actually be able to build clinical career ladders for clinicians while they're getting to travel the country.
One last final point I want to touch on is how investments in technology and some of these acquisitions that the company has made recently, how that plays into the overall strategy, because it seems like reinvesting in the core business is a key focus and it seems to be really paying off for investors. So can you talk a little bit about how those items are giving you a competitive edge in the market?
Sure, we have a single vision, and our vision and goal is to connect our professionals to our clients in a seamless, frictionless manner on our tech-enabled platform. So we live by this value. And what that does is it helps us to be able to deliver our professionals, our clinicians faster to the client, while the client has the highest quality clinicians, and they're able to then fill their needs and be able to continue to run their business. And so we're making large investments. We've doubled our CapEx spend from 2021 to 2022, and we'll continue to make heavy investments in technology to ensure that we can go take a clinician from the door to the floor as fast as possible while having the highest quality clinicians, making sure we're taking care of the patients.
Well, John, thank you so much for your insights today. We really appreciate talking to you.
Thank you, Alexis. It was a pleasure to be here.
And you can head on over to investors.com for more of our coverage on the medical sector. For Investors Business Daily, I'm Alexis Garcia.